This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
In a list entry should be at least 3 Neds on the Audit Committee, one of whom who has had recent relevant financial experience. The key roles for the Audit Committee are oversight, assessment and review. Oversight, assessment and review of the other functions and systems. They don't get involved, do they? They don't get their hands dirty. I can oversee something by standing back from it and just watching it. I can assess something without getting heavily involved. I can review without getting heavily involved. So they're not involved in the day-to-day hassle and running of the company. Most of the board's objectives relating to internal control, even then, they're going to be delegated to the Audit Committee, and the Audit Committee itself is going to delegate. The Audit Committee should. They don't. Do they? Do they? Does an Audit Committee review the entity's internal financial controls? Do they review all the entity's internal controls and risk management systems? Or do they approve the wording in the financial statements? That I can understand them doing. Approve the wording in the financial statements relating to internal control and risk management. They receive reports from management about the effectiveness of the control systems, and they receive reports concerning the conclusion of any tests carried out on the controls by either internal or external. They're not going to do this. Surely not. This committee, this subcommittee of 3 or 5 independent, experienced and proven ability people who are strangers to the company, are they really going to review the entity's internal financial controls, or are they going to delegate that? Who's a better person to review the company's internal financial controls? A better person to consider the internal control and risk management systems? Who's a better person or a better department? Do you not think that internal auditors will be the ideal people to consider risk, consider internal controls, consider financial reporting? So in a substantial company, a public quoted company, I would not be surprised to find an internal audit department, and part of their role within the company is these reviews, reviewing the company's internal financial controls and improving them and assessing whether they're working. Reviewing internal controls generally and risk management systems. This is surely a role or a function of the internal auditors, but then the internal auditors should report. Ideally, to whom should internal auditors report? Chief Financial Officer, Chief Executive Officer, Board of Directors, Audit Committee. To whom would ideally the Chief Internal Auditor report? To the Audit Committee, yeah, to the Audit Committee. Internal control systems, page 36. To be effective, internal control systems need to minimize successfully the business risks identified by management. To be effective, an internal control system should eliminate insofar as it can, or certainly minimize the risks that the company faces. Identified by management. Management are too busy, surely management are too busy trying to negotiate contracts, trying to design new products, trying to prepare the accounts so that the auditors can come and audit them. Surely the directors, the executive board, are too busy directing the company. The management, the second layer management, the purchasing officer, the chief accountant who's not the finance director, they're also going to have their hands full. Business risks identified by management. Who are the best people to identify business risks? Internal auditors, yeah. Do you know where the word auditor comes from? The word auditor, that's a strange word anyway, isn't it? Audit. Do you know where the word comes from? It comes from the Latin verb audire, A-U-D-I-R-E, audire. And audire means to listen or to hear. Alright, that's what auditors do. They listen, they hear. That's where the derivation of the word auditor. And in there is the internal auditor. That's the external auditor, and that's the internal auditor. Alright? Just, if you find yourself sitting in the exam room wondering what you can write, you can always help your colleagues. Plays an important role, internal control systems plays an important role in managing these risks which most threaten the attainment of the entity's business objectives. The company is going to decide on strategy, management is going to decide on tactics, workers are going to decide on operations. The directors, the executive board, has decided strategy. They'll pass the tactics as to how we achieve the strategy. They'll pass that down to the departmental heads. Internal control, managing the risks which are identified by these people, internal control will prevent those risks from happening, hopefully. If we can prevent the risks from occurring, from actually taking place, the threats from taking place, this is therefore going to help the company achieve its stated objectives established by the executive. Contributes significantly, internal control contributes significantly to protecting shareholder investment, safeguarding assets, and ensuring compliance with law and regulation. And another part of the definition, the standard definition of internal control, is that it's management's responsibility, and therefore the board's responsibility, to seek to prevent fraud and error. It's their job to seek to prevent and detect fraud and error. And one of the ways in which they can do that most effectively is to establish an internal control system which itself is designed to detect and prevent fraud and error, which is the next point down here, that it should also seek to prevent and detect fraud. In a poor control environment, fraud could more easily develop. I was just thinking about what I was telling you about what happened to John's computer on Tuesday. In a poor control environment, fraud can happen more easily. In an insecure building, like this one apparently is, it's easier for somebody to steal something and walk out with it. If it were better controlled, if there were a lock on the front door to come in and that was continually kept locked and the reception was continually manned, then this person that stole John's tablet could not have got in. If, as a matter of routine, whenever this room is emptied, we were to lock the door, then I would feel secure that my computer was safe. It happened, I have a feeling it was BPP in Birmingham, but I may be wrong, and if anyone from BPP should happen to hear what I'm about to say, I do apologise because I may be wrong. But somebody, one morning in BPP, and I think it was Birmingham, I think it was BPP, somebody came in at lunchtime and undid the computers, and one of the two of the students was still in there over lunch and said, "What are you doing?" He said, "We've been asked by BPP to service the computers," and they undid them and put them in the bag and took them out, and the lecturer appeared at 2 o'clock in the afternoon and said, "Where's the computer?" It had been stolen. It wasn't just one, it was a number of them. They'd lost the computers, lost their projectors. Insecure environment. So internal control is our doors locked when rooms are emptied. Or is it ever available, or should I say, is it never available for any individual to be left in a room on their own? As soon as you leave somebody in a room on their own, the risk is there. It's difficult not for me not to look at you. I'm not accusing you in any way. But it is difficult to control. If any person is left in a room on their own, then the opportunity is there for theft. That's why you should never leave a person alone with a computer, because that's the time when they can manipulate data, input false data, change whatever is there. You should always leave at least 2 people in the room.
You should lock your computer.
You should not what?
You should lock.
Yeah, lock your computer. Do you know the password for the person who sits next to you in the office? Are you able to get into their computer? Well, let me tell you, they know yours, because I was talking to them the other day. Yeah, they know yours. And you ring up and you say, can you just check on my computer? And they say, well, I can't get in. And so, the password is this, and you tell them your password.
Actually, too much security can cause insecurity.
You can call insecurity.
Cause insecurity.
You can cause insecurity by being too paranoid about it. Yeah, by people then forever looking over the shoulder, wondering if anybody, and that will develop the paranoia. It's only the same principle as when I go shopping in a supermarket. And you get these, you see the cameras, you can see the cameras, and they're moving around like this. And I consciously keep my hands in my pockets, and I consciously do not take my hands out of my pockets. And I mean, it makes shopping difficult. If my hands are continuously in my pockets, it makes shopping very difficult. But if I do, I make a flamboyant gesture and take my hand out and take the things down, put them in the trolley, and then put my hand back in and push the trolley with my stomach, in order that nobody could possibly accuse me of potentially of stealing anything. But that's another interesting thing, and it's like an auditor. These cameras are like auditors, aren't they? It doesn't matter. A camera has the same effect on me, I don't know about you, has the same effect on me whether it's got a film in it or not. It doesn't matter, because all I can do is I can see the camera, and so far as I am aware, there's a film in it. And it's taking pictures of me, and I'll smile up at it in a second, smile and wave at them, and then put my hand back in my pocket. And it's a deterrent. It deters casual fraud, casual theft. But it's only the same as auditors. The fact that an auditor appears and doesn't apparently find many errors, faults or frauds, it doesn't matter. The reason they don't find many is because people know that they're going to come back year after year looking for, in the public's mind, looking for frauds. And therefore, if you're a casual fraudster, you won't commit a fraud, because you know that people like Yanis and Andres and Julia, they're going to come back and start checking up and looking for fraud, so you don't do it. They're a deterrent. It's like, you don't have, I've not seen quite so much out here as in the UK, but in the UK, as a generalization, we don't tend to live in apartments, we tend to live in houses. And so our houses are rather linear rather than vertical. They're linear along the street. We've got a lot more space in the UK than you have here, even though we have a lot more population. But if I'm a burglar, if I'm looking to break into somebody's house, and I'm walking down the street looking at houses potentially to break into, I see that one's got a burglar alarm box, I'm not going to go in there. That one has as well, I'm not going to go in there. Oh, but that one hasn't got a burglar alarm box, that's the one I'm going to break into. This is the auditor. They're a burglar alarm box. They're a camera without a film. That's what they are. They're cameras without films. And I had a client, when I had my own little accountancy practice, I had a client who would collect the inserts from toilet rolls, the cardboard inserts, and he'd collect little boxes like bigger than this calculator box, but little cardboard boxes. And he'd spray paint them black, and he'd put this toilet roll holder there, he'd leave that sticking out, and he'd attach a tiny little red light underneath with a battery, and it would flash. And if I put that on the wall there, and it's got a flashing red light underneath with a thing which looks like a camera lens sticking out of it, what do you think it is? You think it's a camera. You don't start looking behind it, see if it's connected to anything. And he made these, and he would sell them for £20. He'd sell them for £20. It's as good as any burglar alarm. It's as good as any security camera. Just put that on the wall, that'll stop people. Brilliant idea. You're a deterrent, you're a flashing light, that's what you are. Internal controls should be reviewed continually, improved as appropriate. The costs of implementing a control should not exceed the benefit to be gained from the reduced risk. But I think that's common sense, isn't it? You can establish any perfect or as near perfect system of control. John could. But what's the point? What would be the point of John instituting a phenomenal system of internal control to protect petty cash when his petty cash never exceeds £50 anyway? What's the point of having these security cameras and internal auditors and spot checks and surprise cash counts? What's the point of all that if the most he can lose is £50? And he's not going to lose that too often, is he? He lost, do you know, I lost my petty cash yesterday. There was £50 in it. I'll make sure I don't lose it again. I'll lock it in a box. Do you know, someone stole my box. It had £50 in it. They'll not do it again. I'll lock it in my desk. Do you know, somebody stole my petty cash. They broke into my desk. They'll not do it again. I'll keep it in my pocket. So how many times are you going to lose your £50? But you could have security cameras and direct links to the police station and group force security coming along on irregular basis throughout the night. The expense of total security could far outweigh the potential loss if the risk were to happen. Suitability of a control will vary from entity to entity. Again, just think about it. I remember teaching materiality on a course in Manchester many years ago. Oh, I hesitate to think. I was talking about materiality on an auditing course. And the whole of this side of the room, 5 rows of 2, were from Ernst Young. No, they were from Arthur Anderson. Down here, there were 5 rows of 4 desks. There were 20 people, and they were all from Price Waterhouse. And over on this side of the room, there were 10 students, 1 each from 10 different firms, just small firms. And we're talking about materiality. And I can remember exactly his name and exactly where he sat. He sat 4 rows back, 2 desks in. It's a man called Dave Judge. And he said, Mike, on the audit I was on until last Friday, before we came on the course, he said we came across a mistake, an error, which we dismissed as immaterial. It was only £5 million. And they just dismissed it as immaterial. And these 10 looked with their mouths open. 5 million dismissed as immaterial. And I said, do you realise that you've just dismissed as immaterial an amount greater than the aggregate of all their firms' fee incomes? And Arthur Anderson and Price Waterhouse went, and they couldn't believe it. The materiality is so subjective. This thing about it, the quality or the style or the extent of controls has got to be dependent from entity to entity. Your company has probably got American-based controls. Your company may have no controls at all. Your company, possibly you don't need controls in your company. But each one you have to consider separately and think about the costs of instituting and implementing controls. It should be an integral part of any entity's risk management system, strategy. It shouldn't be an afterthought. It should be thought of at the time that we're determining what our strategy to risk is going to be. How much, what strength, the extent of the internal controls that we're going to introduce. And effective financial controls, including maintenance of proper accounting records, are an important element of any system of internal controls. And then we've got the internal controls categorization. We've got a list of controls. It's an old-fashioned list, I have to admit. The newer version includes things like reconciliations, and reconciliations. So there is a new version which has got 3 elements of control called reconciliations. But this is an old-fashioned one, which still, in my view, my humble opinion, is still perfectly relevant. And it's the mnemonic OAP spasm. What's OAP? Do you know OAP? OAP is it's the accepted abbreviation in the UK for an old age pensioner, someone who's past the pensionable age. And a spasm, do you know what a spasm is? A spasm is a sort of mini fit. So if you imagine John having a mini fit, then you've got OAP spasm. All right.
What is age for old age pensioner?
Well, it's older than the French. The French had just increased it from 60 to 62. In the UK, men retirement age is 65. Women traditionally were 60, but they've just started increasing it. They're increasing it over a period of time. So I think maybe every 3 years it rises 1 year. So they're going to equalise it. There was a big argument about equality, treating sexes equality, treating men the same as women. And men were retiring at 65, women were retiring at 60. So there's a big argument about why can we not be treated equally. The men were obviously hoping that they would drop the retirement age down to 60. And the government has said, yes, you're right, we'll treat you equally, we'll raise the women's retirement age to 65. So half the population is not happy. I was going to say something else then as well, I've forgotten. Oh, that was always unfair, wasn't it? I don't know. I don't think you're a big religious community out here, are you? You're not heavily into religion. Certainly in the Bible, it says something about men's life shall be 70 years, that's 70 years, whereas women are expected to survive for 80 years, that's 80 years, a score is 20. Well, that's why. Tell me, where's the fairness in that? Not the fact that women tend to live longer, which you have to accept, because men do a lot more work and a lot more effort is put in. Women tend to have an easier life. So the men will probably die earlier because they've been working harder. So that's not the... do you not think I'm a brave man here? Do you not think this is bravery, courage, or just stupidity? But men retire at the age of 65 and they're expected to die at the age of 70 according to the Bible. They get 5 years of post-work retirement. Women retire at 60 and they only are dying at 80, so you get 20 years. Now where's the fairness in that? Why should you have 20 years of retirement and I only get 5? I don't have to die at the age of 70, and it's just that was the prediction in the Bible. Maybe I could live a little bit longer. I don't know how did we get there? Oh, you asked me what the retirement age was. Anyway, we've got OAP spasm here. O, organisational controls. Organisation controls. The way the organisation is structured. You have all sorts of structures, can't you? The classic one has got to be this one, the pyramid structure, where at the top you've got top layer directors, and then you get the management, and then you get the senior departmental bits, and then the workers down at the bottom. Where are the internal auditors on this? Where are the internal auditors in this structure? Are they here or are they here? Or whereabouts are they? They're outside, yes, ideally they're reporting to top level. Ideally they're reporting to the Supervisory Audit Committee, and the internal auditors are out there. That's where they should be. The internal auditors reporting to the Audit Committee, the Supervisory Subcommittee of the NEDs. So organisational structures, they can be a pyramid structure. There's a flat structure as well. There's a flat structure, almost a tabletop structure, and maybe with a head there, maybe the chief executive, and then we get these departmental ones, and there's a head of department and then a few people underneath. So they're reporting upwards in almost a tabular structure, tabular format. Then there's also one called the mushroom structure. Mushroom structure, and the principle of management there is that you keep everybody in the dark and throw them some shit from time to time. It's the mushroom structure. Don't write that one down in the exam. In fact, I don't think you're going to get either of those down in the exam. That's a mushroom. Do you think?
I understand where are the employees in this structure.
I'll explain that one to you later. Don't worry about where the employees are. They're kept in the dark and they're thrown shit every now and then. That's their role. You better eliminate that last minute or so. A is authorization. Authorization. Authority. There needs to be someone in authority who is able to give the go-ahead or to stop things from happening. The easy one to think of would be the issue of credit notes for greater than a specified amount. That credit notes shall not be issued for amounts in excess of, say, 5,000 without proper authority from the sales director or from the chief executive or the finance director. So authority levels and de minimis where nobody cares about if it's less than that. That was an interesting one as well. The newspapers in the UK identified authorization levels. If you're in the middle of a structure building a major building, like for instance the Welsh Parliament or the Scottish Assembly or the Welsh Assembly, where the Welsh members of Parliament who sit in Parliament in London, but also when it concerns specifically Welsh affairs, they will sit in the Welsh Assembly in Cardiff. And the same with the Scots, they will sit in the Scottish Assembly in Scotland. And one of them, I can't remember if it was, I think it was the Scots, they had to have approval for all expenses in order to keep tight control over the money, over the budgets. They had to have tight control over their expenditure. But you can't be expecting somebody in overall control of expenditure to be looking at every single invoice that's coming through. There must be hundreds and hundreds of them on a daily basis. So what was established was that they would give their approval for payment to any invoice which was for greater than £10,000. But anything less than that, just pay it because it's immaterial. And the Scottish newspapers, I think, the Scottish newspapers found or were told of an invoice for a screwdriver. And the person supplying the screwdriver had charged £8,000 for a screwdriver. It's got to be gold-plated for that much. £8,000 for a screwdriver, but because it was below the 10,000 limit, nobody cared. It didn't require the second authority. You have to have authorization levels, but they've got to be sensible. And every now and then, presumably, it would make sense on a random basis for other invoices also to be scrutinized in order to ensure that we're not paying £8,000 for a screwdriver.
It's such a bad control. It's so easy to split one big purchase in several parts.
Oh, shh, like this. Shh. Instead of, you can't subdivide a screwdriver though, can you? To one screwdriver handle, 2,000, to one screwdriver blade, 3,000. You can't subdivide a screwdriver. Otherwise it's easy. If you have there is a case involving a finance company where it was required that they have 2 signatures on a cheque, on a payment order, for any figure in excess of 5,000, any loan in excess of 5,000. And there was only one director who was there on a daily basis, and he was finding it a hassle because somebody goes in for a loan of 50,000, he's having to write out 10 payment orders. So this is what you're saying, it's easy to get around. He writes out 10 payment orders. So he's authorizing personally, he's authorizing a 50,000 loan by simply circumventing the problem. Yeah. But you're right, it can be broken down. For instance, I could invoice you for page 37 and then invoice you for page 39 and send you another invoice for page 41. I could do that, or John could do that. So that's authorization. P is physical controls. Physical controls. Obvious things were making sure that John's computer doesn't get stolen, or that a company car doesn't get stolen, or inventory doesn't go walkabout. S, supervision. Supervision. Doesn't have to be active supervision, just somebody in the background, just keeping an eye on things, just making sure that what we hope to achieve is actually being achieved. P is personnel. Personnel. And personnel is making sure that you employ the people that you want to employ, making sure that people who are in your employment are trustworthy, honest, upright, and people of integrity, people who are fair, people who you can rely on. So personnel is important, and clearly your firms, your employers have all got it right, because immediately it's obvious that you're trustworthy, honest, upright citizens. Arithmetic and accounting. Arithmetic and accounting controls. These will be the financial controls helping to ensure that financial statements are properly prepared and that proper accounting records are being maintained. So it involves and includes all these reconciliations of current accounts, of accounts with customers and suppliers, reconciliations of the bank. So the detail of the revised list would include those reconciliations. That's arithmetic and accounting. S is segregation. Segregation. The segregation and rotation. It's two combined. Segregation and rotation of duties. Segregation, not allowing any one person total control over any material element of the financial procedures. Don't allow any individual absolute authority over any individual material area of financial procedures. So you have a problem there. Just I'll come back to segregation in a minute. I'll tell you a little story. M is management. Management should be involved. Management should be involved in day-to-day supervision, day-to-day authorization, day-to-day overseeing. So there should be hands-on management. Management should not be people who step aside and let the workers get on with it. Management needs to be actually there, authorizing, supervising, reconciling. So management involvement is important. Just go back to segregation. I remember as a trainee being part of the audit team for a big public quoted company. And one of the assignments that I was given was to complete the internal control questionnaires for all the subsidiaries within the group. And it was a new thing in the firm. We'd not dealt with internal control questionnaires before. And I went to a subsidiary, which by coincidence was quite close to home, but I went to a subsidiary and said, I'm from the auditors, here's my authority, here's my identification. Can I come in and ask you some questions? They had been warned, they knew that I was going. So I sat down in the office, and there was a woman there, and there was a young boy, wandering in and out from the warehouse into the offices and back again. And I started asking these questions, and he said, that's not applicable. The chief executive said, that's not applicable here. There's only me and my nephew and this part-time woman. Well, I didn't know what a part-time woman was. I mean, if she was only a woman part-time, what is she the rest of the time? But she was a part-time woman anyway, and she worked 2.5 days a week. That was what he meant by a part-time woman. And I said, well, okay. And then I started asking him questions about the staff canteen and the workers' canteen. He says, that's not applicable. We don't have a staff canteen. We don't have a workers' canteen. There's only me and my nephew and this part-time woman. I said, well, I understand that in the office here, but what about the workforce? Do you have clock cards for people to show when they've arrived in the morning? He said, that doesn't apply here because there's only me and my nephew and a part-time woman. And by then I'm getting the idea of that, in fact, there's only him and his nephew and a part-time woman. There was no segregation available. You couldn't segregate their duties because there was only him and his nephew and a part-time woman. So segregation and rotation of duties, it just went out of the window. Internal controls. Our duties regularly rotated. There's only me, my nephew, and a part-time woman. And the answer, therefore, is no. And I remember doing, just before we have a break, I remember doing the cash count. I remember it was part of the audit program. count the cash, count the vouchers which have not yet been written up into the petty cash book, count the number of stamps, the postage stamps which are there, add those, and cross-add or cross-multiply the value of the stamps, the value of the unrecorded vouchers, count the cash and make sure that it adds up to such and such a figure, the impressed figure. So I did all this counting and writing out the schedules and counted all the money, so many £20, so many £10, so many £5. And then I said that at the end, I've messed that one up. I didn't count the cash. I counted the value of the vouchers and counted the value of the stamps. And I knew what the float should be. So then I said, can I now count the cash? And he said, yes, how much do you want? He said, reaching into his pocket. How much do we need? 20, 40, 68, there's the £80. And it was in his pocket. And it was in his wallet. It was in his private wallet. It wasn't in any fancy, this is the petty cash wallet for the company and this is my own wallet. It was just his ordinary cash. How much should there be? There it is, 24. Just throw it away. Internal controls, it's not worth having in that particular case. So that was management's involvement. Him, his nephew, and a part-time woman. And then on page 38, you've got a subdivision of these 8 controls. There's structural controls, transactional controls, and personnel, staff controls. So I'm going to ask you to read page 38 and see how they fit in, how these 8 do fit into the 3 subdivisions of structure, transaction, and staff. And while you're reading it and trying to memorize it, I'm going to go downstairs and have myself a coffee.